What's up, guys? What's up? Welcome to Inside Traders. My name is Caleb Ogden. I'm your host, and this is a show where we talk about the options market and the order flow. And so today is kind of a special episode because I've been using some of the concepts discussed in this show, like specifically option pricing dynamics and order flow, to develop a set of trading tools, which are like trying to combine all these different sets of data that we have into, like something that will give me an edge. And that's what people want, right? They want an edge. And I just think if ever there was a time where it would be possible to have an edge, it would be when markets are evolving so quickly in real time and there's unprecedented transparency and access to information. And that's kind of a new thing in history. And what's certainly new is individual people being able to tap into this data and leverage it to make their own automatic trading systems similar to hedge funds. One of the things that I have learned in my time in the markets is that technical analysis is kind of pretty reliable until it's not. So like the problem with technical analysis is you can't actually make any real trade decisions by it. And it's almost the same thing with order flow. I think that there's something special that can happen if you combine both of those two into an aggregate signal that maybe also combines many signals as you can possibly test with. And then, of course, runs experiments, isolated experiments, day by day, session by session, to try to understand the impact of what these different signals and how they might change the trading bot's behavior. Like, what is the impact of all that? And so to me, it's kind of a fun technical challenge. I haven't spent much time coding in the last couple of years, and it's been nice to have something to sink my teeth into. And so the cool thing about the markets and what's available right now is the incredible volume of real-time data. And so they say in what's that movie with Matthew McConaughey? He's like the Wall Street guy, Wolf of Wall Street, I think it is. Anyway, whatever it is, with Mr. Leonardo DiCaprio. What's the actual quote? Shit, now I can't remember. It's like you can be. Oh, actually, I think this is from Margin Call. But anyway, the quote is something like, "You can be right or you can be first," or like, "You can be smart or you can be first." And I think even if you're smart, it is very difficult to overcome just the very it's like it's not an alien world, but the markets are definitely dangerous. They're very dangerous, and they're so counterintuitive. They are intuitive in some ways, in so many ways, but in the gotchas really hurt in the markets. And so one of the goals of this show is just to document all the stuff that I've learned, all the gotchas, and hopefully people pay me for it. What? No, just like hopefully it's valuable, and hopefully somebody can learn from that. And I don't even know how much you can, though. Like, I think a lot of it you just have to learn through experience. What I do think is valuable and could be like made available would be just like some easy tools that help people make better decisions by just like, for example, if you're going to make a buy, maybe you have a system that does like a pre-flight check and it wraps in RSI and Bollinger Bands and order flow and all this stuff. So like if they see that like $5 million of unusually high volume premium of bearish activity just was deployed on that name 10 minutes ago, which I know. I can tell you if that happened. I could tell you that easy. I don't think there's a lot of people that could tell you that, but I can tell you that. And it's because this data is so available. It's incredible. And so like, that's what I think the edge is possible from. I'm not saying I found an edge, but like why I think it'd be fun to try to like play the game enough to develop it would be because it's actually possible for the first time ever, I think, for normal people. And so I know and can speculate a little bit about the lengths people had to go to in the early days of markets to get information to help them make a better decision. You have to have information. Like a lot of bad decisions are just you didn't know. And if there is a system that is like safeguarding and checking all of your orders and also suggesting things and is plugged into an LLM that can like analyze and give professional feedback because it's not handcuffed by OpenAI, like it can actually be really valuable. And that is plugged into your earwig, which Apple's Neuralink device connects to and just speaks into your brain in real time. It's going to be maybe a decade before that one, but still, like all this stuff is fun to me because it's so cumulative. Like it's such a infinite world, and I just think if the players that are operating on it, where it's like oil and they're like harvesting it or whatever, they have learned the ins and outs of a really tricky game. Because like I said, a lot of it is intuitively counterintuitive. And I think a lot of traders would know what that means. And so, but it's actually counterintuitively intuitive, but also just always counterintuitive until it is not that way. I don't know how to say it any better. So like we could just like, I could show you some stuff. Let's go to the flow. So like, it's just helpful to know that this is where all the money in the market is going. So we had 155 million of premium going into NVIDIA, Amazon, Apple, Alibaba, Square, and these guys. So like, maybe if you're thinking about you have a bunch of cash, where should you deploy it? The interesting part might be where this money is deploying it. And then the question would be, well, what is their sentiment? First of all, interesting that like by far and away, the most premium goes into Tesla. Interesting. Just, is that not notable? I think it's notable. I think that's new information. That's information I never had. So I don't know, do with that what you will. Let's look at the sentiment. Pretty bullish. Yeah, I mean, it was pretty bullish actually. We got some rightful pudding in the morning, and then it evened out, and when it went bullish, I think it was pretty bullish all day. A little bit of put wall, but this was the market. And wow, look at that streak. Ooh, that's such a good streak. So here's what I think. When I see something like this, why can't I record the last put and call sequence and just like keep track of all the trades? And so like I can see and use my own order flow to compare and contrast and all that. And what am I trying to say? So why can't I look at this window of trades coming in and then see when it's been like 3 in a row of a certain type, put or call, right? And then that begins to stack on a multiplier of 4, 5, 6, not like 100, but you know, like whatever the scale of the multiplier is, or that scalar would be increasing, I think, a lot more by this streak. So this is actually pretty unusual. I can tell you that's pretty unusual. To see that much green on the screen, it's not often. And so I don't have this built at all. But like one thing I could imagine building that I think would be useful is if the technicals agree and the scraped sentiment agrees and the Twitter sphere and the I don't know, like whatever GDT, whatever my AI, we could just ask him whatever he comes up with to monitor and track in terms of improving our win rate by basically reducing our loss rate to begin. And I think that'll go a long ways. But no, just fully automating the buy side and the sell side. And so I've been working on automating the sell side through this program called Delta Hedge. And it takes advantage of the special pricing dynamic of options to be able to, I think, full seconds before the actual market, make hedge decisions. Now, it's not great and it fails and it's not executing actually right now anyway. So it's a long ways off. But what I have proven is that you can hedge by delta and it works really well. So like today, I saw, for example, some art contracts I was monitoring and their delta fell by like 20% by like 10 a.m. or whatever. Had the system been active at like 1/4 that delta, it would have activated a sold call and a purchase put. Both of those would have created a kind of a trap, a delta trap. Whoomp. So that by the time it got down to like 20% lower delta, that would have been at a profit. And like if you were aware of it, like maybe if you had a buy side automator. Anyway, if you were aware of it, you could close the spread trade right then. Boom, you could collapse it and take all those gains. And then if it kept going lower, what would the system do? It'd be like, shit, I don't have the delta's out of balance again because I'm polling every 10 milliseconds or whatever, because I can calculate my own delta. It's pretty reliable. So far, it's pretty reliable. And so I'm recalculating delta. Like I can probably recalculate delta on every WebSocket quote update from Tradier. Actually, I know I can. I should just do that. I mean, you can't really do that because it just depends on the contract. But what I could do is I could target like a short list of contracts and then just calculate those deltas only so that it's always live stream a delta, because that's what you need. Because if it dips for even like a dip, you need it to boom. And then that boom is a credit spread. And then it's like, how do you find the contracts? That logic isn't super easy. GD gamma delta theta, for anyone who thinks it's a typo, is this guy's name. What are we going to ask him? What signals and indicators can we use to improve our win rate whilst, let's use the whilst trading. Let's just see if he plays into it, Sometimes he does. Trading is hard and it's a good idea to improve your win rate. Yeah, got moving averages. Yes, already have it. Kind of think I can get it. Don't have it. Anyway, the point is volume, all these things, you plug all that into a system and maybe even get that system making decisions by pulling an AI. And maybe that AI is actually first being run through a gate. I don't know how these AI agents are going to work. I think it's going to be pretty powerful when you have one LLM talking to another LLM and getting a new emergent result. And then that's how our minds work. Like people think, everyone is a multiplicity is one of my favorite quotes from our late great Nietzsche. Is just thinking of us as a multiplicity is pretty useful. Like nobody's one thing, right? You're different depending on what you have for breakfast or if you woke up on the wrong side of the bed. And so like everybody has variance in that way. And what am I telling you about Nietzsche for when we're talking about stocks? Nietzsche, I don't know. point is, I don't know, whatever, fuck whatever that was. Like, I'm trying to build this system that uses all these indicators to improve my win rate. And I think I can mostly do that by reducing my loss rate. And I think that the best way to do that is to hedge, but it's really hard to hedge. And so, like, people do it in these different ways, and there's easy ways, and you should probably buckle up your seatbelt and do it the easy way before you try to do it the hard way. But I like playing in hard mode. I mean, actually I've always liked playing in easy mode, but that's kind of a fun change then. And so, like, hard mode means I'm going to try to build the airplane in a war zone while it's taking off. So, like, it's definitely going to crash a couple of times. And but the cool thing that I found from these initial tests is that the idea of hedging by delta is sound. It's totally sound. And it makes sense that it would be sound. Not only is it sound, it's just the beginning. Of course, you should be hedging by gamma and theta. And those should all be piped in through a AI learning module that interfaces with that's why I was telling you about, like, the power of when LLMs can speak to each other and, like, make like joint decisions, and kind of like the Congress of your mind, like when you're mulling it over, like the exchange that can happen between opposing ideas, if you want to bring it to, like, not being schizophrenic or whatever. I think if you get a network of LLMs and each one of them has specialized training, so it's physically different. I mean, it's not physical. You know what I mean? Structurally different. I think it is physically different. I bet you could represent it physically. But it is structurally different from the other LLMs. And so it is going to have, like, people talk about LLMs being biased. That's all it is bias. That's like saying air is oxygen and air, that's even bad to say. Like, I don't know what that's like saying. The whole point of an LLM is to have bias. Like, what else? It has to have a weight for a decision, and it's going to sum up all those according to, like, matrices of dimensional complexities of whatever they got. I don't know how it works. But it's going to get an index, and then it's going to get another one, and eventually it'll get to consensus, and it'll say, probably this is the right word to say next. And it'll probably be right, because we spent like millions of dollars on GDT, and they estimate that we're going to spend billions. So if GDT can, please write me a function that will predict the next stock price based on historical data. What inputs would you need to get a high probability of accuracy, or at least something interesting? Question mark. See what he says. Okay, certainly. What? That's like $5,000 of somebody's time. What if he could actually do it? If he could do it, that'd be like 25 grand of value, right? I mean, I doubt he can do it, but he can help you think about it and come up with ideas for it, for sure. Days for SMA. So kind of like, while he's thinking about that or whatever, let's go back to the order flow and to Tesla. Because here's what I think it's possible to code or whatever. Are we on? We're on. So you go to the green wall. Look at that. That's a lot of green on the screen. And it is, yeah, it's a lot of green. Okay. So ostensibly, this 121,000, can you see that? Am I blocking it? No, it's right there. This $121,000 being deployed into Tesla calls, which are expiring this Friday, is massively at risk. It has an overnight risk. It has a duration risk. It has a complete environmental macro risk with Iran and Palestine, not to mention the uncertainty that has been plaguing markets since the beginning of COVID. And you combine all this stuff, and still this guy's like 121 grand. Let's put it on the line. And so who knows? Who knows how long he had that trade open, or when he made his exit, or what tools and systems he had, or she had to, or it had to, like make, it's so confusing to make this trade. $121,000, that for, and if you're wrong, you get nuked, and it happens on Friday. That's crazy shit. Now, what's cool about that is, let's say you had a system, like I said, streaming the delta. And so instead of a system polling every however fast it could complete its previous work cycle, plus 100 milliseconds, you just had a delta stream, and all you had to do is like take your long delta minus your short delta. There's your index. Make sure it's the same. Just make sure it's the same. That's all you have to do. And so if you do that, then you can get, I think, really more efficient at selling. Okay. And then your sell side is automated, and you can actually even delta hedge in different ways, where you can delta hedge where you're like, if my delta doubles from the index, reset the index, or or hedge, wait for that hedge delta to be like seen as different, and then reset the index. That kind of stuff. So you could just start adding all these rules. And I don't know, but the cool thing is you can definitely test them, you can tag them, and then with some kind of an ID that you can then later put into a spreadsheet and just, figure out if it was a successful program or whatever, experiment within the feature set that you're using to make your automated buy and sell decisions. And so here's my thought after thinking about this. And this is all kind of new for me, because if you watch previous episodes, which you should really do, all of them, all endless hours I've talked into this camera, you should go see all of it, for real. Maybe you'll enjoy it. I don't know. Or maybe an LLM can parse it out or whatever. But, so we got all this. Let's see. We got all this. Calls coming into Tesla. Okay. So there's a good chance that the market can have a reversal. But let's say we had a system that had automatically bought. In fact, I did this all day. And so I didn't do anything. I had a program running that was monitoring the order flow, and in real time, as in, this is what's so crazy. This is what I think people won't understand or really grasp the importance of. But I'm pretty sure that real time means like less than 1,000 milliseconds. But let's say a full second, just because that is a lot of time in market lands. In the land of today's markets, that's like a long time. A second, that's a long time. And so we have a second. Okay, so that trade gets reported to the market. Why? Because everyone is reporting on the public markets their trades. and all the APIs instantly rebroadcast it everywhere. Okay. Some of those APIs filter down and distill the signal of that trade. And they can say it was super out of the money. It had higher volume than there was even open interest. It was logged as a sweep it was logged as a sweep, and it was a ton of premium, and it expires in less than a month. That should get your attention. And so like you create this index, and then the further you are from that, the less it is unusual, I should say. Yeah, like I think you get all of this stuff combined, and it creates a pretty interesting opportunity. So like today I wrote this trade bot. We should look at it. This is what it did on a paper wallet. It's a paper wallet, but it's all relative. First of all, you could just do this with options, and then anyone could get the money to do it. Like I'm not ready to try it with options, but in theory, it could be done with options. And this was the Auto Trader's result. And if I was to guess why I think that total net might actually be pretty consistent, it'll be we'll find out in a couple of days, right? This was the first time I ever tried it. And so why I think it's a possibility, I have no idea. Why I think it's a possibility that there could be a slight edge there is because of the speed element, of the timing of it all. Like that trade, that nobody's responding to, the retailers aren't responding to the market that quick. I don't think many institutions are. And so they all have their algorithmic bots or whatever, but portfolio managers, they're FUD. Like they're not responding to the markets in that kind of real time. Like the only thing that can respond to the market in that kind of real time is an auto trader. And so if I was to believe that this system, because here's the thing, this isn't the portfolio value change. That's like 5x or more or whatever. That's like quite a bit more unrealized. Actually, I don't think it's 5x. I think it might be like 2 or 3. But still, that's not realized. This is the realized cash difference in the account for the day. That's crazy. That's crazy. And it was like pretty easy to pull. And so, yeah, I think that is going to be very interesting because it's just going to run tomorrow and just see what it does. Because here's the thing. Let's say tomorrow it's super bearish. Super bearish. Well, first of all, it's already built up a bunch of bearish positions that would be valuable, okay? And this is kind of like the interesting part of just like combining the full auto trader in and just giving it your own weights and biases. So like, here's the thing, you need a slider and a phone that's like, what's your bullishness this, what's your risk appetite that, what's your this, what's your that. And that's your auto buy and sell side rules. And then the system like maintains all that for you. And so, but I think to compete in today's markets, you have to have automated trading with a lot of rules, and you have to have like a lot of switches so that if things like go wrong in your systems, you have a way to go to cash and then even to get that cash out of the system as well. And so, like you got to get out of your brokerage and yeah, there's just a bunch of lessons to share. You know why they call it a brokerage? They help you go broke. Like the brokerage is not your friend. The brokerage is there to help you lose your money. So that's something to think about. Like this is why I love this total net cash difference here, because what is the brokerage like is there to help you go broke. It's in the name. And so when you start a trade, when you place a trade, you've already lost. You've lost for like 20 reasons. You lost because the brokerage took their cut and the market maker took his cut, and you're a dummy and you didn't look at the technicals first, so it's a bad time anyway, and you're a double dummy for not looking at the sentiment before you hit buy as well. But when you hit the button on my system, it does all those checks for you. It's called a pre-flight quality check. And if it doesn't meet your standards as defined in the thingy, then it doesn't execute, or it sends an email or whatever rule you apply. That's the only way to trade. That's the only way. It has to be automatic because the whole market is automatic. So you're just shooting by the hip. Otherwise, I think. What are you going by then? What are you going by? I mean, to me, you put your bias into the trader. Like, you still have your bullish or bearish sentiments on whatever, but why even care at all? Like, one of the things I've been saying on the show is that I want to be agnostic to price. I don't care. I don't care what the price is. I just want to make money, first of all. And I don't want to make money once. I want to have a system that generates cash by farming the markets, because money is made up, and this whole world is run by it, including all the shit happening in Palestine and Iran, which I know nothing about and should say nothing about because I don't know anything about it other than I don't know. How long have they been fighting? It seems like a long time. I don't know. But it is horrible that people are willing to do that to each other in the name of Allah, Yahweh, or whatever. They both have a God and they think that God's the real God. But then the Christians are like, no, it's what is his name? I don't know what Christians call their God. Elohim? Like, that's what the Mormons call it. What do the Christians call their God? Yahweh? I think that's Jews. Anyway, you got all those Allahs and Yahwehs and Elohims in a room, and like, they can't all be God. So maybe they're demigods. I don't know. But either way, you guys are going to kill each other for your gods. And what kind of a God is that anyway? So that's my political 2 cents on it. My political 2 cents is I don't know anything about it. And I'm just here to talk about markets. And so let's get back to that. But I did have something to say, so I'm glad we got that out of the way. Back to this daily P&L. So that's net cash value. And here's why I think that's cool. Because, so let's say tomorrow, because right now this was like the opening day, so everything's like 50-50. There's no gain, no loss, right? Because it just did whatever. Like, I mean, there's some gain and some loss. I think does have an upward tilt, but the market was up anyway. But it would have just bought. It was buying as much hedge as the system. At one point, it had, I think it still has like 6K in, or like a good amount of the portfolio, like percentage in SH in inverse SPY. So yeah, like, why do I think that that's interesting? I think it's interesting because, so let's play out the scenario. Let's say tomorrow the market tanks. What is the paper trading wallet? It's not real money. What is the paper trading wallet going to do? Well, first of all, it's going to have this base already of hedge that it can sell for profit. And so the total nets of that hedge that it's selling, it's going to be realizing a gain. That's creating fresh cash in the account. And at a realized gain, like, that's really valuable. And then even like taxes and fees, whatever, like, let all that eat into the profits. It doesn't matter. It matters that the profits are realized and that they're being realized immediately, and they're being realized from hedge. And so your hedge position is, well, wait, no, that's not happening yet. What's happening when the market goes down is I have all these other positions that are now in the money, you would say. And so, like, they're not much in the money, but they're like a little bit in the money. And so if the system goes down, or if the market goes down tomorrow, I know exactly what the system is going to do. It's going to sell those immediately, I think for a profit. Because it's going to be happening millisecond by millisecond. And so like, unless we gap like super low, and even if we do, it would still be good to have it, like do that. It's going to start executing those trades. Boom, 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 boom. And I think there's a lot I can do to, like, by the way, tune that signal. Right now, it's really raw and it doesn't actually consider that much. I think I can get that. I think I can get the buy side and the sell side to be a lot more precise. And so like all of that seems like an opportunity. Just, I don't know, like I think it's a new thing for people to be able to calculate their own delta. I don't know how many people have done that. I know people do it all the time. I just think that they're the first ones in history to ever think of it, because nobody could have thought of it before 1970. So it's kind of new shit, if you ask me. So yeah, like the cool thing about it is we're modeling what happens when it goes down tomorrow, or if it did. So then it's whether or not it's for profit. I think it would be for profit. It would be booking gains on the way down and adding them to a position that is growing in value. Then, assuming there would be a reversal, if not, it wouldn't do anything. It would just keep buying according to it. And so, yeah. But like the point is that now it has a base to operate from. And so if Tesla goes down, it's going to sell Tesla for a profit, book that into the total net. Where's the thing? Into the total net profit, and then use that to purchase hedge, which will only be sold if the market reverses. That's cool. That's so cool. I don't know. Like, we'll see if it works, right? Like, I'll be able to share some results soon enough, and we'll just see if it works. But even if it doesn't work, I think I'll be able to dig in and figure out why it didn't work. And some of the reasons I think it won't work is because of churn. Like right now, its churn is just way too high. And so what I could do is I could set quality checks, and maybe like instead of just placing an order, it has to pass a technical bar, and it has to pass a sentiment line, and then if it doesn't, then maybe it's not discarded, it's then reduced into a pool, and then that pool can be drawn on by other rules or by itself later. And so like some of that information is still reserved in a vat or a trap or whatever, like something you can contain the information in and then use it later to be like, okay, so I think there's something to be said about keeping track of like things like velocity. I don't know how to describe that, like the rate at which things happen over time. And it's not only that, it's like the distilled aggregates. So like you want a vat of information by intervals, I think. So you want to be able to look at things by minute, 5 minute, 15 minute, 30-minute, hour, half, like 3, I don't know, something. You know what I mean? And then you want all your cuts and splits of that data as well. But it's all like way too much for any person to ever consider. The only thing the consideration should be is what to consider. Like that's what the person should be focused on, is let's put my bias and my ideas into the system, which is going to weight that and have it be whatever. All this is like protecting against my own bad trading behavior. And so is kind of the goal of this stuff. Like it really is easy to get emotional and even just like not quite realize. Like one of the biggest problems I had in my investing career was just not understanding my risk, just not even being aware of it at all. But to be fair, there aren't a lot of tools out there that help you understand your risk. I've had to build all mine. So It's not like it was like right in front of me and I was like ignoring it. At least in terms that was obvious to me. So yeah, so this is the actual P&L. Pretty freaking good. Yeah, I like that. 190. Okay, so in the model, we go down, it's selling Tesla for profit and adding it to a position that's growing in value, which if the market reverses, it would be at the top of its inverse value. So then we would start booking profits in the other direction. And like the real thing I have to do is reduce churn. So I can show you like there's plenty of churn happening. But then here's the thing, that churn kind of worked both ways, where sometimes I'd actually benefit from it. Let's see. So here is what it was doing. Basically, until I can find, I want to find the most inversely correlated asset I possibly can to that asset, like as highly inversely correlated as possible. And yes, if I can't find that, then I just use a very stable asset like a T-bill. But ideally, I can find a completely inverse or even more than 1-to-1 inverse, because I think I'd rather be weighted to protect against the downside. And so, but yeah, like all this, first of all, this is work. This is real work happening here. Okay. Is that what, where are we? Okay. Pages next. 1,500 results. Look at this. I mean, we could look, it's a paper wallet. It doesn't matter. And so what did it do? This is just like where the money was flowing. Like I didn't choose to put 10 grand into Apple. In fact, if I remember, I bet if we look at the history, what's Apple's opposite? Yeah. I think at one point there was like 10 grand in anti-Apple. Let's see. Let's say status filled, type there. So look at this. Buys, tons of buys. Where is it? Buy 32, buy 24. Those are big buys. Like that is buy 41. Oh, sell 41. That's a big sell. And I can tell you right when that came, actually, I saw that happen. And so like, what is this system doing? It's like booking this gain for me. Crazy. That's nuts. That's nuts. I mean, I don't know. I don't want to get excited because I just barely built it today. So like, I doubt it's that actually, I'm sure that I'm going to find a lot of holes in it, right? Like anything, it's going to have a lot of bugs, but just the idea of it makes a ton of sense to me. I can't really think of a better idea than to just combine all these signals, have it execute in real time, because even if like you don't even have to be, you just can't be the last guy. You don't have to be the first guy. You just can't be the last guy, because the last guy is holding the bag and all the other last guys, like they're all the bag holders. And so if a bunch of people are selling, that's going to wake up all the systems and more people are going to start getting involved in making trade decisions. And that might be sell. Same thing with buy, same exact thing. But like the point is, I think this system is like more interesting in protecting against a crash than like making a ton of profits. But like if there was that happening, then what would it be doing? It would immediately be realizing gains from its previously profitable longs and putting that into the inverse asset at the bottom. Like, let's say you go up for a week, it's putting it in at the bottom. And let's say it goes down for a week, assuming no human intervention, right? It would, what would it do? Assuming it goes down it would just keep selling and doing the inverse until the market reverses. You see what I'm saying? It's always just going by, I don't know, like maybe it'll churn so much that it just averages out and it doesn't do anything. But it kind of makes sense to me that the edge is how real time it is. As in like the second look at this. This was triggered by an event. I mean, we would probably have a hard time finding it. I think we could try. Let's see. Well, actually, just... So what is this? Okay. That's not anything. I thought that was going to give me history. Let's go back. So anyway, point is, like, I didn't enter this 41 quantity here. That happened because a giant whale bet on Apple. Hey, bud. That happened because a giant whale. You want to say hi? You want to show people? Yeah, say hi. There you go. All right. There is. Green screen works on YouTube, but right, obviously. So anyway, that the reason why this sell happened and why these profits were booked, and I think it's actually still profitable, which is crazy, which is also crazy. Okay, it's barely, the position is barely out of the money. Barely out of the money. It was profitable. And so what was that order size? What was it? 42 times 21? Okay, so that's grand. But it's not anything that crazy. It's 10% of the whole position. How about that? That's something. But yeah, like, I think the reason why, in theory, there could be an edge in that system, especially if you can reduce churn and limit your losses, would be because of the real-time aspect. Because if there is a bunch of one thing happening, a bunch of buying or a bunch of selling, you're not going to be on the wrong side of that. In fact, let's look at Tesla. I haven't even looked. Let's see what it is. Okay, it's up. It's up. Like, the position is up like 1.5%. And it bought a ton of Tesla. I mean, I had started with a couple things just to, lubricate the system or whatever. And so I couldn't actually tell you the net because it could have gone below 100, but I did add 100 in the whole system, and 1,000 of JetQ and a bunch of other stuff was added when the system started. But other than that, it's pretty clean in terms of like no human interference or whatever. So yeah, I mean, whatever, the total position is definitely higher than I made it. And if you ask me, this is all work. There's pages of work happening. We go back to this. 1,500 units of work happened today. 1,500 units of work. You know what this would have taken me to do? I would have had to notice it on the screen, decide it's a good idea, punch it into my phone, and execute. Now, the question is, what are the fees that I'm paying? I don't know. I think that whatever the fees are, they're going to be less than it's going to be fine. Like, I just got to pay everyone. Here's why your brokerage is against you. Everyone's got to get paid. Now, they shouldn't be against you, especially if their name is Robinhood and they're like telling you that they're safe. And for new investors, no, not even a little bit, not at all. Criminal negligence is hard to like make that claim of anyone, but it is like hilarious if your broker says that they're safe. Your broker, the guy that's helping you go broke, no, that guy's not safe. And so your brokerage isn't safe. Robinhood isn't safe. So yeah, just there's things to know about this world of trading, and it's that they at least see it as a zero-sum game. So regardless of whatever it might be, look at this. This is awesome. ExxonMobil. I would never have bought this. Where, how do I show you? There. I wouldn't own ExxonMobil, like, it's just in there because it's part of the system. And so It had a bunch of trades. Well, why doesn't it own more? Where's the position? Oh, it does. Hey, it's up 3 cents. And so, yeah, I guess it put $700 into ExxonMobil. I would have never done that in a million years. So somebody out there thinks that something's happening. So we should actually see what it is, right? Let's take a look. Wow, very bullish. Damn. Look at that. Jeez. And into close. That's something. Okay, well, let's say I bought ExxonMobil at the peak. Oh, no, that's so bad. What are we going to do? Well, let me show you what would happen. It would immediately start harvesting this at the money position. So basically, if anything, a small loss is incurred. But then it just keeps harvesting that until it harvests the entire thing. And then it draws from the pool. But so long as the sellers are selling, it does try to sell along with them in that name, because that is a name that we're interested in establishing a position for whatever reason. It could be a volume, it could be a sector, it could be a diversity, or it could be a main whatever. But yes, ExxonMobil. That is just so funny. I had to pause because I just wouldn't have done that. And I wonder what else is in here that I wouldn't have done. I haven't even looked at it. AMC, well, that I did intentionally. Hey, that's up 2%. Don't mock me for that. We got some AMC bulls out there. I'm one of them, I guess. Run. Boeing Airline. I mean, these are companies that I've interacted with in the past, or are on some kind of like watch list or something. Quality list. GM's in there. That's funny. I mean, I bet if we look at the sentiment, it's going to be bullish. Yeah, there you go. You can't see that. Oh, let me do it on this one. GM, enter, bullish. Ba-boom. So like it's just copying the order flow, not that sophisticated. And it had a ton of churn. And so Chewy, Snap. Oh, that's great. I love seeing that. ARK. Whoa, ARK got nuked. That's funny. ARK got nuked. ARK was a big position. So that means SARK must have quite the holding. Let's see. SARK, where is it? Oh, I must be looking at, no, SARK. What? That's crazy. That's crazy. I'm going to have to look into that. Oh, no. Okay. That was a call. That was a call option. You can't see my screen. So, no, geez, it over doubled. Wow. How is it still a loss? It's still a loss. Oh, my God. That's crazy. How is it a loss when it was a gain on the day? That's so funny. But that must mean if there's no SARK, either there's a bug in my system or it was bullish. Bullish. I keep putting in the wrong one. Bullish. Boom. So, yeah, interesting. I like it. I like it. And so we'll see what tomorrow is, but if it is selling, then it'll just sell. And the main thing it tries to do is size things properly. So like, I know there's a lot of work to do in terms of what to do if I don't execute the order based on a trade. I do think that has to go into some kind of pool, and maybe that's split between a sector and an equity, or maybe it's always just only for that equity only is probably safer. I think it is safer because the thing that makes this such high signal is people aren't betting on the market, they're betting on a name. Like that is 1,000 times more signal than betting on an ETF. Now, I'm willing to bet on a few ETFs because of different reasons, but I did get churned a ton on SPY and QQQ, and I think that's in part because they're used as like instruments. And so you can see like buy 429.40, sell 429.23. And I just think they don't have enough signal in them. You can't use the auto traders for these. You have to use the auto traders on individual names. Unless you're going to tune it to a model designed just for SPY, that could be something. I could see that. So like that's another thing I didn't really think about that should be possible. So you can tune the model by name. That's not bad. Yeah, that would be interesting to play with and see what's possible. So yeah, that's kind of like what the first try of this is. But this is the other side of a two-part program. So part one, and it's got like 1,000 ideas or whatever, but like a lot of other services as well and tools as well. But the main two are a hedging program, so a sell side, and I would call it like, I don't know what I would call this because it hedges as well, but it is an auto buyer, like it's an auto buyer. And so what it's trying to do is express it's an auto trader, and that auto trader is backed by a hedge program. But that hedge program is mainly concerned with options. So I think I might also want to hedge stocks. I don't know. Or maybe both of them are just the same actually equivalent of each other in their individual markets, is now that I'm thinking about it. But not quite, because I would never follow the option trades trade by trade. That just seems too risky. That seems too risky. But if you did, wow, that could be something. I mean, well, here's one thing. If you did get this algorithm really dialed in for the actual, where'd it go? The actual market, and it was like consistently printing, let's go back to the P&L screen. This total net was above zero, even if it's like 1, right? Because that's a lot of activity. Now, here's what total net has to include, like everyone's fees, FINRA's fees, the market maker fees, the brokerage fees. Like, that's what I'm talking about. Like, your broker is there to help you go broke. Everyone is against you in the markets. Everyone, always, forever. There is like, it's never not going to be that way. And so like you have to have systems to protect yourself from that. And I think I don't think, that's why I need to find a way to account for it, because those fees they're not hidden exactly, but they're not obvious either. And so you just got to think about that stuff. But honestly, I think a lot of this is mitigated in just having a better trade program. And you should just be happy to pay everyone. You should be happy that everyone gets their cut. But like a new trader, what I would tell them is like, you start at a loss. Even if you think it's a good time, even if you think it's whatever, you're paying fees all the way through, one way or another. And so you should think about that a lot when it comes to trade frequency. Now, this is a high frequency trade bot. We saw it did 1,500 units of work today, work which I would have never been able to do manually. It would have taken more minutes to put all the information into the app than I would have had in the day. And so, but maybe the program sucks, right? Maybe tomorrow I come back, it's like negative 5,000. The program sucks. How would it have sucked? It's just going to do whatever the market does. I don't know. But if I combine that with like a hedge program, which I do think is different. I think one is a sell side and one is a buy side, and they both kind of operate in both. And so it's the same tool for both stocks and options. They're just primarily focused on their respective sides. So the sell side and the buy side. The sell side is the hedge, the buy side is the trader. Okay, that's I think pretty good update for you guys. I won't say I'm like proud of these results. I'm just like, a lot of this stuff is too new to get excited about. But if you ask me, there's a reason. Well, first of all, I've been motivated to get to this point for a long time. I have been building a lot of infrastructure to be able to produce that number. And a lot of that infrastructure now can be leveraged to create more tools. So it's not even like that it was all for this or whatever. It's a platform it's a set of spaghetti code, but it does help me execute trades that I wouldn't otherwise be able to, which is kind of the whole point. Like, I would never be able to manually enter all those trades. If you ask me, that's valuable. No, it's only valuable if this total net stays above zero, but it doesn't have to stay much above zero. And if I can focus on this number and constantly attribute it, like, why can't I crack that number open and see dollar for dollar what was lost? What are the names? Why does that happen? Dig in, look at the decisions, add a rule, add it by experiment and ID. Boom, we have our own A/B testing platform that is tracking its own P&L. And one of these times, the test's going to be like really obvious. It's going to be like, well, the test itself was nominally only, $50 more than the day, but on a relative basis, it was up 400%. Like, that's going to happen, and down, and that'll be a good thing to catch. And so this introduces a framework for A/B testing and each feature that we add to the algorithm, to the trader, to the trade bot. But eventually all this has to be abstracted into a user interface that just has a drag and drop, because none of this shit should matter. Robinhood should have built this, right? Like, fucking calling it safe. Like, this is how you get safe. This is safe. This is code and software. And not really, because it's just, I'm coding it myself as a hobby for fun, and partially because I'm pissed that it doesn't exist and that nobody's working on this. How am I the one that has to build this? Like, I want to use this tool. This tool, like, is kind of crazy because the incentives are all aligned against not sharing it and not building it. And that's kind of just this way that people see of looking at the markets. The way I look at the markets is about the same way I look at Social Security, where it's like, oh, that's cute. Like, I wonder how long that's going to last. There's always going to be markets, but the current system is, I don't know. For some reason, I don't see it as very sustainable. And so, like, but I do want to dive in there and see what I can do. And so I'm testing out these ideas. One is to hedge and make sell decisions by delta. And I like that idea a lot, because I think that delta and gamma and theta and these properties by which options are priced create a unique edge that isn't available through stocks. And that edge only really becomes available at delta 99, and you don't want to start at delta 99 necessarily. You want to start like right at like 96 and then go into 99 and never have it go out. That means that option expires in the money, and at 99 in the money, so that you really did have a perfect price. Now, I think it should be possible to analyze the entire chain of gamma, delta, and theta for these ideal contracts, which I've experienced them before, and they're a pleasure to hold. They're a pleasure. And I desire to hold them once again, but unless you're going to get lucky, you got to build a system. And so that's what I'm trying to do in all of this. Why? Because I just don't think anyone could do it before, and it'll be fun. It'll be fun. And it's a good use of a lot of my past experience in technology, and it's a good use of my interest in markets. And so for that reason, I can justify spending this much time thinking about these stupid numbers. But I just enjoy it. So I'm not going to be too abashed about that. But yeah, like I think it should be possible to build these kind of automated systems. Look at this guy. First of all, AI made this image. I think it's cool. Like I didn't work that hard on it, and I think it's pretty cool. Like, I just think we're in this crazy AI world where these robots can give us a big advantage. And I just don't know how many people are out there with a socket connection to the price that is going to live stream the delta to a expiring contract and make hedge decisions. I think there's like probably a lot of big banks and institutions doing that. You know, I don't know how many individuals are doing that. I don't know, maybe a lot, but maybe it's a really bad idea, but I got the idea from this guy. So if it is, I'm not to blame. It's AI that's to blame. And so, yeah, we will see if delta hedging works in the fullness of time. So far for me, it works a lot. And much of the code that is being written to actually build these units of these services and these tools like TradeFlow, MarketFlow, Delta Hedge, and Trader, and the auto, anyway, whatever, a bunch of little services. First of all, in theory, like you can work to shoot yourself in the foot or whatever. So I'm not saying I'm like impervious to like making a mistake here or whatever, but in theory, all of those are doing valuable work for me. And just even think about placing the trade. Takes time, takes energy, takes focus. That auto trader can run 24/7 according to whatever rules you want. You can say only execute if the premium is above $1 million. You can say only execute after 3 in a row. You can say sell with profits at a higher bias and generate cash. And you can put in your overall sentiment and have the system go on autopilot. And then it just does all that stuff for you. And as much as you want, you can crack it open and customize things as you want, or you can just use the bearish and bullish slider. And then the system does it for you. And it probably does it better than your sliders, but we still let you do it that way. And I take 10% of every delta hedge sold, and that is my cut. And so it'll be fun to try to build it. It'll be fun. But like first, I'm still just pathfinding, still just testing ideas. The initial tests of delta hedge are pretty good. They're pretty good. Like even today, it would have tried to, we can see some of the hedge values. So did it try to hedge any of these? I wish there was a way. Oh, wait, what is this? Oh, I think that's what we want. Okay, so no, that's not it. Let's go back. Well, anyway, I'll have to figure out how to get the actual live logs or whatever that show the hedging program. But it is recalculating the delta a ton. So like I said, earlier in the day, it was trying to sell on ARK. It was like, come on, let me hedge. And the trade wouldn't execute. But it was trying to hedge. But then the problem with that hedge thing is it's not a problem. It's actually a great feature. But like there just is no buy side. It's only a sell side. So I think you do the buy side through stocks and you do the sell side through options. And then if you're really feeling crazy, you can turn on focus fire mode, which you better believe exists. Let's just hide that from the screen. Hold on. Just go ahead and purge this of any unsightly identifiers that we don't want broadcast into the world. There we go. So delta hedge I mean, obviously you're just going to rewind. There's nothing to see. There's nothing, but enjoy. Focus fire. Yeah, you better believe we got focus fire, which I think you have to give it a contract. So yeah, focus fire mode is pretty intense. It has its own dedicated socket connections for everything, and I should add delta. But I think I need like a 1 millisecond execution time. And if I get there, that's actually competitive. I said 1, I think I mean like 10. I think 100 is, first of all, I know that 20 seconds is pretty competitive to anyone on the planet. Okay? Let's just be real. But if I'm trading against algos, it's got to be like 10 milliseconds. Now, the question is, if you're going to make it that reactive, how are you not going to churn? And that's where I think you rely on that's where you get to express yourself, and you get to say, here's my sentiment, basically. And then it makes decisions based off the sentiment. So if you're really bullish, it's going to go trade for trade on buys and wait for sells. If you're really bearish, it's going to, do the opposite, and all sorts of things. It can look at the velocity, the size, the type, and compare all that to history, and then run it through a machine learning algorithm and create an index. And that's a quality score. And then you see that quality score on a screen, and it's in a button that's right in front of you, and you just press that button because it turned green. Why? Because it's like 99% delta. Boom. Anyway, that'll be fun to try to build, but I'm a long ways off from that. But slow but steady progress on most of the software required. So anything else for you guys today? No, I'll just be following up on the profit and loss. And let's just look at it one more time because it's nice and pretty to see. I like seeing it. Ooh, look at that. 190.62. That's a good number. That's like zero anything. That's the raw number. And you could say it's because the market went up, but why would it have been any different? I don't see why it would have been any different. The whole point of this is like, I'm not touching it. So we get to see what the actual results are, right? Like the second I get involved, it's impossible to distinguish, although that's not even true at all. I can tag each trade and track the P&L separately. But still, I do like the idea of just having it be totally on autopilot, because that would be the whole fun of the system. Is I can go in and make my manual trades whenever I want, but generally it's just on autopilot. Just do what the market does. I don't give a fuck. Just do what the market does, right? And then one day if I have like a strong opinion, I can go in and do my thing. But if this system isn't reliable, it churns a ton, it creates losses, and it has not plugged in 1/100th of what could be done, 1,000th it's of what could be done to make better decisions. But even so, it managed to get a net up of that's like quite a bit if you ask me, in ratio wise. Like what's the ratio on that? 254 divided by 63, 4-1. That can't be that high. It is that high. That means it wins 4 times for every loss. Or it did today. So this is probably an anomalous result. This is probably not going to be repeated tomorrow. But I do think that whatever the result is, like total loss tomorrow could be 5,000. It could be. I have no idea. Whatever happens, I think I can dig in, and I'm already working on an attribution system. I mean, we could attribute these, right? Let's just do it. Because I do kind of want to see where these losses came from. I exclude these guys because they churn too much. I want to see the high signal, and I'm also not, I stopped buying on them early in the day. So the results need to be excluded anyway. And I took them out for that reason because they do churn. And so gain total losses. Can we just see it by company? Let's do another one and just call it, whoops. Real quick. I can do it. Let's just do it. By company, by symbol. Ooh, it hurts us. This is just gonna have to be that. And then we're going to have to say if not ACK symbol ACK symbol equals that. And then we just got to pop this guy in front of everything. So instead of that, it's this gl.act. Boom, boom. Boom, 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 boom. I think that's all we need. And then we can log it. What is it complaining about? Ideas? No. What's this one? Dot now. Okay, then let's just log this out. Do I have to wait that? No. Let's see what it says. It's not a function. What? What did you say? Oh, it isn't. It's a value. That work? Nice. Okay, so total gain on SoFi was 12 cents. Loss of 2 cents on Pinterest. We got to sort this by something. In fact, let's just do it. Equals object dot values this, and then we can say dot sort maybe. What was the structure? It's got to be like because I have to grab it from the object values gain. Oh no, I should just be able to say gain, but let's do it by net. I think that should work, right? I think. On unknown. We'll say this as we'll actually just type it for ourselves. We have loss, number, gain, number, and that's good enough. And so then we'll say we'll log this. Boom. Oops. Okay, so then we sort by what? Dot net, actually. It's funny, the one I missed. I think this should work, right? That's the same structure. What is this complaining about? Extra thing. Let's see if this gives it sorted. Okay, so what is a symbol? We need to put the symbol back in there. Let's just add it into our thing here. That way everything has it. And then we could say this. Yes. So Tesla Q had a total loss of $31. Wow. Interesting. I don't know that I've ever made money. Actually, I definitely have. Shorting Tesla, definitely. $30. What is this? How can this be net percent? Oh, that's like tracking the actual thing. I guess I do that because I want to get an average. And this is just accumulated. So still, what's it saying? Loss, gain, 96 net, minus 30. So this lost $30 on Tesla Q. It's kind of a lot. It's like half. It's like half the losses. Wait, this is sorted, so the sort worked. It lost. Okay, so all the money was lost on shorts. So everything it put into shorts lost. That's funny. That's funny. That makes sense. Look at this. That's exactly what you would expect. All of the losses came from that. We're at 30. What was that? 44? 55? Yeah, that's all the losses. So they were all shorts. T-bill. Oh, that's all churn. But there were so many trades happening on this. So many trades. And that's good to know, though. So I'll have to factor that into the daily costs. See, this 2 cents, that's Tradier's cut for the transactions. Damn, that's a big cut, guys. It's a big cut. So yeah, the net is minus 3. That almost makes me not want to use T-bills to as the default. Like I should use something. I don't know. That makes it complicated. But that's not like a crazy fee for the volume. I mean, it was probably, a couple $100,000 that was transacted or whatever. Anyway, very interesting results. Well, where's all the gain? In Tesla. So that's the exact opposite. So the highest losses and the highest gains are at the opposite ends. Amazon, Apple, Nvidia. So it was Tesla and then Amazon. Whoa. $50? Nice. That's realized profit. That means from selling Amazon. Like that was realized from selling Amazon. This was realized from selling Tesla. This isn't the position went up. It was booking gains on the way down. Like there's a big difference in my mind. Nvidia, $9. Some unprofitable ones in there. Apple, $8. Wow. Palantir. JP Morgan's in there. Look at that. Nice. Carnival Cruise Lines, MGM. There you go. There you go. I mean, that's what people were buying. I didn't make that choice. That's just what people were buying today. Cool. Well, I think that's pretty fun for the Autobot. And I'm going to keep adding features, and we'll see what tomorrow brings. I would almost want it to be bearish. Almost. Because I think it should work just the same in terms of booking profits and building positions. And so there's so much to learn and so much I don't know. Like I'm sure I'll learn the hard way, but for now, pretty pleased with these initial results. So thank you guys for joining me, and have a good night.